Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today we're going to look at, obviously, our favorite, the Primary Vision Frac Spread Count, and we're just going to talk with you a little bit about what drove it, what do we think is going to happen over the coming few weeks, and then a couple of storms that are going to hit the Gulf of Mexico. So just diving right in, we can talk with you now about where we sit, which is 80. So we came in at 80, which is, last week we were at 70. We talked about some of this increase that we started to see getting, we were preparing for it. It wasn't really there yet. We didn't have really that confirmation, but we knew we were going to get some additional activity, specifically in the Permian and some of the other basins within Texas. So now that we see some of this growth, the question is, where do we go next? And right before we started filming, we were talking about, what is really going to drive this? Like, why would you even go into these actions when crude is sitting at, let's say as of right now, 42.33? And the answer is really, one, you have hedges. Two, you have minimum volume commitments in those pipes. But the other biggest one is, what is your decline curve? How much can I expend now so I don't have to spend as much in the next year? Because decline curves catch up with you. If they catch up too fast, then you're in such a hole that you're really not going to be able to dig yourself out of. And this is why we're seeing some of this activity, some of these benefits. And when we just look at things in terms of the way they were over the last 3 months, even though we're getting some additional activity, some of these interesting factoids like the Bakken and Eagle Ford are still under 10 active operators. So even though we are getting some additional activity, it's still very consolidated as to who is doing that activity. Now, as you can see, we went from that 70 to 80, but really, what does the next week look like? Given where we see activity and how things are going, we are pretty confident that we're going to sit within, again, that 77 to 82, 83 level over the next week or two. And then as we start to come into September, we think we're going to get a little bit of a jump and get closer to 85 and then sit between that 80 and 85 level, just as people get more confident and kind of look at, okay, well, I know what my balance sheet is. I've hedged myself out through the remainder of the year, and I can start whittling away and kind of protecting myself and really kind of gearing up for 2021, because that's when you're going to start to see some of this come to life. And just to put it into context, like, what is 2020 versus 2019? It's obviously that steep drop off. And typically, we talked about it in the past, August is a slower month, and we're just not seeing that slowdown as we talked about last week. Instead, we actually got that increase, which we think that increase it's going to kind of hold around here. Guys are going to get comfortable because we did have a few one-offs as some spot guys came into some of the smaller basins. You start to get a little bit of a pickup in work in some key areas, but then, that'll just kind of fall off. But really the biggest driver is obviously going to be Texas as we go into the September months. Now, the big thing, too, when you look at, okay, well, what is going to drive this going forward? And you look at DUCs, or drilled but uncompleted wells, the EIA updated their information. And again, we talk about in the write-ups and previous videos about how the DUC count, there's at least half of these just don't work. And they don't work for various reasons, whether it be price, missed locations, maybe some issues in terms of that parent-child structure that was created when they realized it didn't really work, or it pulled away too much pressure. So some of these just won't see the light of day. Then there's, let's say 20%, 10 to maybe 15 to 20% that work closer to this price deck, given that there's a sunk cost already. So you have a certain amount of activity that can come back, and you can see that the Bakken has seen a relatively strong increase in DUCs from 2019, and it keeps trickling higher through 2020. And this is even with Bakken rig counts at really all-time lows. So there's going to be some work that can be used, and the biggest thing, obviously, for us is going to be Texas. Like, Texas is going to drive this. Things are going to move forward, but we have seen a big increase in natural gas pricing. So when we look at natural gas pricing, we have to look at Appalachia. And Appalachia has been relatively consistent over the last 3 weeks, but we think that we're going to start to see an increase in activity, because even though this is just looking at natural gas storage, if we look at natural gas storage going back to 1994, you can see that we're at all-time highs. The expectation is starting to build in that we're going to be close to about 3.9 to 4 trillion cubic feet in storage, which a lot of that is priced in. People know that it's baked in. The question is now what is going to happen going forward? And you can see that on a pricing level, the curve is really shifted higher, because when you look at how people are going to interact, what are we going to see any more activity? You have to look at the curve and say, okay, well, are things getting a little bit better? Do people expect things to get better? Is there a way I can hedge, lock in this price, and then I'm able to get some activity? And there's going to be a mixture of that. There's going to be a mixture of, well, we do see more activity happening in the Permian. We do see more activity in Texas overall. So that will increase a certain amount of gas production. But at this pricing level, you will see a little bit more in terms of Appalachia. Again, we're not going to see this huge surge, but we will get some support of current activity. And we should see, let's say 2 to 5 spreads get added over the next, let's say 6 to 8 weeks. And then when we start to look at LNG exports, this was a huge overhang as we saw guys canceling or deferring, or we saw some other just headwinds in terms of LNG, because the expectation was anywhere from 6 to 8 BCF a day. And now things have started to normalize. September, October looking a little bit better than what expectations were, especially October. So that will help kind of pull some more through. And now we see with Chevron shutting down and checking Gorgon trains 1 and 3, you're going to see a little bit more of a hiccup in terms of supply in the international market, which should be, or at least help a little bit or support LNG flow, which just means that you'll get a little bit of that pull through. And then when we look to kind of Genscape in terms of what dry gas production is, when we look at Genscape BNEF, you can see that we're kind of waffling in this level. And even though we're here, and even though California is experiencing their rolling brownouts, we really haven't seen a huge jump in electricity generation or demand. So that's why you kind of get this balancing act. But again, there's enough here to support a little bit more activity in Appalachia. Again, nothing crazy, but that's why we're trying to understand where our frac spread's going, and then are we going to get confirmation of that? We can kind of opine on where do we go, but how do we stay there? Do we have the support? And right now we have some support for not only a little bit additional activity in oil across Texas, maybe a touch across the Bakken, but again, a little bit in Appalachia as well. Now, the next thing is, looking at hurricane paths and what's coming. So we have 2 storms coming into the Gulf of Mexico. Little factoids, the last time this happened was 1959. And then before that, it was 1933. So we're hitting on 1933, a great year for us. So here you can see the impact. It shouldn't be above a Category 1. Mostly a tropical storm is the way the wind is projecting. But again, we saw Katrina surge. We've seen surges before. So this is something to watch. It will impact exports, imports, gasoline demand, oil, but all of it is transitory. It always is. We're going to get a little bit of a hiccup right now in terms of just oil production as well as natural gas production. Just to give you an idea of how much, it's still fluid. Right now, Shell is talking about removing non-essential personnel from the Gulf, but right now, no impact to actual production. Exxon, things are going to be as normal. But just to kind of look at, okay, well, where are the platforms that we start talking about? Noble's moving 2 ships out of the way just to be cautious. BP is shutting down 4 operated platforms in the Gulf of Mexico. So again, like Shell is taking away non-personnel, not shutting. Exxon, business as usual as of right now. BP is shutting down 4. So again, it shouldn't be huge, but we will see a hiccup. And then obviously this is going to be a problem when we're starting to look at exports, imports, as we look at the EIA data over the next 2 to 3 weeks. And then gasoline demand will also be impacted from people either driving less. First they fill up, then they don't drive as much. So you're going to get those hiccups as well. Another big thing to talk about, before we let you go to your weekend is when we look at Enterprise. So one of their NGL pipelines, a dredger ran over it. It exploded and was on fire. That partially shut down the port of Corpus Christi. So that's also going to have some impacts when we look at some of the data. But those things are always a bit transitory. Unfortunately, 2 people did go to the hospital. So far, everything looks like there's been no loss of life, which is we're always happy and lucky about. But those are some things that are impacting where numbers are going to go over the next couple weeks. So thanks again for watching. We're going to have our OPEC Plus show coming out tomorrow with an update on supply and demand. Next week, we have a loaded schedule. We have our conversations coming out with Chase Taylor, a great macroeconomist, where we really talk about different things and really the dollar and what's going to happen with the dollar and how does that impact oil consumption, oil investment, and hydrocarbons in general over the coming years. Then we follow that up with obviously our EIA show, our economy show, and then our favorite, the Primary Vision Frac Spread Count. And we're also going to have a special update on rare earths in terms of now that we start looking at the trade war, the trade deal, how is that going to impact rare earths? And then we're going to try to carve out some time to talk about that trade deal as things progress into the election in November. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Have a great weekend.